The biggest challenge I have when we bring a new client on is what kind of entity they are. And I'm always asking them. And I always have to laugh because they're always usually saying, I'm an LLC. Okay. The government doesn't have a tax return that's LLC. It's you're either a partnership, an S Corp, a C Corp, or you're a sole proprietor. Goes on your Schedule C on your personal tax return. And then once I finally find out what kind of entity they are, then I can kind of look at their books in a different perspective. So a partnership is you have to have at least two people that are partners. A partnership never usually has to pay anything unless as a state they are a pass-through entity, which means that they have registered with whatever state they happen to be in. Oklahoma does that, where the business pays the tax for the partners. No big deal. The little quirk that's part of the S Corp is you have to pay yourself as a shareholder a reasonable compensation. And that is a big problem because most S Corps don't want to do that. That's part of what, when you agree to be an S Corp, you said, yes, I'm going to make sure that I pay reasonable compensation and da-da-da. The big question is, what is reasonable compensation? The easiest way to find that out is to kind of go Google. What does a tractor salesman make in whatever area of the country you happen to be in? And Google will tell you what is the average amount. So you need to be kind of close to that. The last little company we have, or entity we have, is a C Corp. C Corp there truly is no shareholders and there's no partners. It's owned by whoever. It can be a business, it can be a person, but the corporation pays its own taxes. It's its own entity, it does all of that. No one gets a K-1, no one has to put any of the earnings other than the W-2 on their personal tax returns, and the business pays everything itself.